Our first presentation of the day, Medicine Man Technologies. The company offers cannabis consulting, licensing, their state-of-the-art cultivation and dispensary operating solutions. The company provides the experience and expertise to clients who have the resources necessary to enter the competitive medical and recreational cannabis marketplace. I'll now turn it over to Medicine Man co-founder and CEO, Brett Roper.
Thank you, everybody. Oh. There we go. Well, thanks for coming out today. I'll get started by just giving you a little bit of a background about Medicine Man Technologies. The company was founded in 2014. We went public in 2016 via an S1, a registration statement. We were never a blank check or a shell company. We were recently here, I think last week, moved up to QX status. I think that was actually on Monday. So we're qualified for the QX. The company has shown 7 quarters of growth, quarter-on-quarter top line, and hopefully with this third quarter, 3 quarters of profitability in 2018 as well. So we're up to about 31 employees. The most recent acquisition was a company called Big Tomato. They're a bricks and mortar store out of Denver, but that acquisition was made on kind of a purposeful basis so that we could begin to get their pricing for our clients. So when we have new clients coming online, they need 600 lights or 100 growing tables or other products, we now have an inroad with Big Tomato and having that ownership element embedded within our company that we can hopefully help our clients get better pricing for the materials and elements that they need when they get started up. So we'll move on through the presentation. This is a safe harbor statement. I won't bore everybody by reading it, but it's pretty standard. As of the 9th, we were trading at about $1.76. Our average volume is about 70,000 shares. The 30-day trading range was 124 to 183. Our market cap was approximately $50 million, and we had, with the Big Tomato acquisition, about 28.6 million shares outstanding. There are another 3.2 million shares in warrants that are outstanding, so fully diluted, we're about 31 million shares, thereabouts. Revenue through the first 2 quarters was 2.6+ million. We recently gave guidance for 4.5 million in the third quarter with profitability, and we've been profitable the first 2 quarters as well. The company really divides itself up into several sections of business. So the first section is basically consulting services, and wherein we step in and help people with the money, the desire, but maybe not the skill or the experience in the industry to get licenses in competitive states and to be able to help them in startup with regard to design, deployment, and training. So most recently, a press release we just put out, Grow Ohio Pharma had the 2nd highest score in the state for the level 1 license. They are now online. They've started their grow and they'll be going to dirt. I believe they're already in dirt for their first harvest of flower. They were also one of the few that got a production license granted about 4 weeks ago as well. So they should be fully operational by year end with products in the market by early January. They're a Cultivation Max client. I'll explain that as we go. Calypso was a 2nd round winner in Pennsylvania. They're out of Erie, PA. They had the 3rd highest score in the state. We provided support for both their cultivation and their processing elements. So they're a client that will probably be up and operating by the end of the first quarter of 2019. They're building from scratch. They're doing a build-to-suit or a greenfield build. They'll be about 55,000 square feet. When we consult for folks, basically we might be asked to do an operating plan. We might be able to come in and help with design. So professional services covers a wide variety of elements. We have a designer on our team full-time that's can do architectural scale work and development work and design work. That used to be me with a quad pad back in the day, and thank goodness we have somebody that really knows what they're doing now doing that work. Cultivation Max is a process where we will step in, and when your cultivation skills are maybe not giving you the results you want, or your team's not really up to the point that you're really expecting to achieve your profitability, we can help. So for example, we have several clients now wherein we step in, we provide them with training. We happen to have Josh Hopt as a part of our organization. His company, 3 Alight and Success Nutrients, were both purchased about 1.5 years ago. That deal closed in June of 17. But Josh is a well-known grower who gets very efficient yields, high quality, and It's just amazing to walk through one of his grows. So in this industry, we're changing to recognition of growing expertise in a grams per watt or grams per square foot of flower. In the old days, it was maybe a pounds per light metric, but anymore people talk more in terms of grams per watt or grams per square foot of flower. So in Canada, if you read Organigram's MD&A this past release, you saw that they were now excited to be getting 90 grams of material per flower. Using our methods, if we're not getting 450 to 500 grams of usable material per flower, we're doing something wrong. So our methodologies are very specific. We don't just sell a nutrients that's advanced. There are a lot of good nutrient companies out there. Our nutrient was designed for our growing technologies. So if you'll follow our skills and our SOPs and our standards, which by the way, we've been through GMP and GAC compliance reviews, you should get pretty robust yields. So normally in a good greenhouse, 70, 80, 90 grams a square foot would be considered amazing. We're typically pulling in somewhere between 120 and 130 grams per square feet. Now, once again, there's no wrong way to grow cannabis, but at the end of the day, this is really a manufacturing 101 challenge. So the lowest cost producer with the highest quality and best product line will likely be around, we think, in the years to come. So as you look at the industry, there's a lot going on in that space, and we feel like we're directly connected to it. The 3 Alike technology is just Josh's methodology for growing. There's a book, and every time Alan Brockstein does an interview on camera, I love it because that 3 Alike book is right there on his shelf behind him. So I'm happy he hasn't sent me a bill for extra advertising, but that book has been used throughout the United States and elsewhere to help people get an efficiency at kind of a home grower level. It's definitely different when you have 2,000 plants or 5,000 plants in your facility versus 3 or 4 plants in the basement. And then I mentioned Success Nutrients, which is a nutrients line that Josh developed about 2.5, 3 years ago with an ag chemist in Colorado. He found the nutrients that he was using, and there are a lot of good brands out there, were never consistent from batch to batch. Sometimes the micros would be 10, 20, 30% over what they were supposed to be on the label. Other times they'd be 10, 20, 30% less. Food coloring, additional dilution. So Josh, after he figured out that he wasn't getting always what he was paying for, said, I'm going to create my own nutrient line. So that's Success Nutrients, and that nutrient line is broken out in our financial statements. Moving on, we have clients in 17 different states as well as Puerto Rico. We've recently licensed our IP and nutrients to a company in Canada called Canada House Wellness. They're going to be focusing on the micro cultivator element within the country of Canada. That's a 200-meter indoor operation that we feel like we're absolutely perfect for. So by way of example, I can pick on Canopy because Bruce is a nice guy and he won't know I'm picking on him, but they did $25 million in revenue, $25.9 million last quarter, lost about $90 million, grew about 2,800 kilograms, as I recall, of cannabis, but their base cost to grow a gram fully loaded is in that $9 or $10 range. Here in the U.S., if you're not growing it for $1.50 or $2 or less, you're probably not competitive and you're probably out of business. So one of the things that we look forward to in Canada is the evolution of the micro grower who can grow it very efficiently with very high quality strains that these larger LPs will want to take advantage of. So we see a supply chain shift over the next 3 to 5 years, and we see the Canadian LPs, while they're great brands in process, we expect them to either get that cost down to a level that they can sustain, or like GM. GM doesn't make brake pads or tires or body panels. They contract out for them, just like a good distillery. They don't grow the hops, they don't grow the grains, the barleys to make products with. They contract out for those raw materials. So Medicine Man Technologies, we feel like, is in a really good position to be able to take advantage of our intellectual property on growing efficiently and with high quality in mind. Now we grow on what's typically called a mineral base, and while there's a lot of organic being tossed around, I don't know about the rest of you, but if you look at the food marketplace, probably about 10% of your food sales nationally are organic based. Organic food sources have been around for everybody, and for 10, 15, 20 years as I can recall. We don't see the organic market being huge for cannabis, at least not initially, and we see it following the same trends that we see normal food stuffs and the production of food, both here in the U.S. and Canada and globally. So while we like the idea of that element, we probably will not be seeing a huge push into the organic brands because at the end of the day, people like what they like. Next is market facts. 29 states, including the District of Columbia, have medical initiative. 8 states have adult use. If you include D.C. and I think Massachusetts, we're up to 9 that have adult use with D.C. Colorado has grown its marketplace substantially over the last 5 years. We'd like to use that as an example. 4 years ago in 2014, it was a $385 million business. Last year, it was a $1.5 billion business. 4 years ago, about 5% of the sales were concentrates or oil-based products. The rest was combustible flower and trim. This past year, it was about a 1/3, 2/3 ratio. So you're seeing a big growth in our marketplace in Colorado, not because we're the best in the world, but because we do have tourists. And a lot of those sales do typically come from folks coming to visit our state. It just is California, just as Las Vegas, obviously, and other states coming online. There's a lot of information about how the cannabis industry is going to grow. We would typically steer you to BDS Analytics or New Frontier if you want to get independent reports and information. Those are 2 good sources. We really work strongly in both the cultivation side as well as the deployment of retail. And we do some things that are very unusual. One of the things we do is a very aggressive defoliation of the plant. And we do that for the purposes of getting the plant to be stronger and come back with a better flower yield. By removing those leaves at day 1 and day 20 of flower, we get better light penetration in the canopy, we get elongated stems, and we get much better production of flower. So that's one of the things we do that's a little different. We also don't run mother populations. We're typically pulling our materials from our veg plants in late vegetative states. They're younger, fresher materials that have been more integrated into our growing methods. And when you're looking at a mother population or even tissue culture, which is okay but still not as reliable, we get better results and more consistent results by relying on plants that are young and a little bit more vivacious. I don't know about you, but you've cut my fingers off about every 10 days and asked me to regrow them. I'm going to get pretty pissed at you about the second time you do it. We acquired, as I mentioned, the 3-Elite expertise of Josh Hopt in June of 2017 and the Success Nutrients line. Cultivation Max is a proposition whereby we will go into a grow that's underperforming. Let's say 1.5 pounds, 2 pounds of light, 60, 70 grams a square foot of productivity. If people will use our methods of training and our nutrients and our growing technology, they should be able to easily achieve 120, maybe 130 grams a square foot. We only get paid on the delta of what they were achieving and the new number that they achieved. So if you're already getting 70 grams a square foot, we don't get paid a nickel if all you get is 70 grams. We get paid as a small percentage of that increase in your productivity over a period of time. And that's typically negotiable depending upon the size and scope of a facility. So, for example, Grow Ohio is a Cultivation Max client. We will get paid a percentage of their productivity over 2 pounds of light or 70 grams a square foot for a period of years. We're also responsible for training, setting them up, helping them become operational, helping them hire their team. And one of our senior growers will be on site for probably a year or 2, helping them with that transition. At the end of the day, you can look at this mathematically. If 2 pounds of light was your old metric and you're now getting 3 pounds of light, and a pound is worth $1,200 wholesale, and I'm getting 25% of that pound, that means I'm making $300 per light, but my client is keeping the full 2 pounds plus 3/4 of the overachieved amount, and their cost is going down. So for us, it's mathematical. The more lights, the more efficient we can make somebody that's a partner, the more money they make, and we make a little piece of that over a period of time. The 3-Elite book that Josh provides, actually we've now sold out of all 2,000. They're being actually put out in a little bit less expensive form. I know we gave one to Alan, but typically if you can find a coupon, they used to be available for $350 to $400. We're actually sold out at this point. We're expecting new books to be in the next week or 2. But that 3-Elite book has been really popular for home growers and people that want to get a better, more consistent yield. And our commercial scale is built off of that knowledge and that skill. once again, Success Nutrients, is not the easiest nutrient line to deploy, but it is very specific to the way we grow. So where you can buy Canna, Advanced, Bayer, there are a lot of great nutrients out there. There is no specific methodology for cultivation that's associated with that nutrient mix. Our nutrients are designed to work with our cultivation technology, which we feel like gives better yields. Alan's actually been through a couple of Josh's grows, and anybody that's been through one of his grows will understand that we're getting pretty good performance. Right now, his 2 facilities, even in Colorado, as competitive as it is, he doesn't have a gram of product that's not already sold by the time he's cured it and put it out the door. So they push out about 1,400 pounds a month, and it's generally pre-sold. So Josh has got another business as a cultivator that we don't own. One of these days we might own that. Who knows what's coming down the road. But as Colorado looks at the law restricting ownership, we expect that law to change moving into next year with the new governor, which would then allow public company ownership of Colorado-based companies. So you have several really strong and very profitable companies in Colorado: Live Well, Native Roots, Green Solutions, the Incredibles guys, Wana Brands. There are a lot of really good companies in Colorado that have paid the price over the years to get their brand and their knowledge and their product up to a point that it's very well received. So we expect to see some very interesting things in Colorado coming up into the new year if that bill does get passed, which both Polis and his Republican counterpart, they both said that they would support and sign a bill such as that, or at least not veto it. So we really seek to partner and work with other groups in the space. One of the reasons we do Cultivation Max is somebody else is bringing the money and the desire, we bring the skills, and then we get a way to share in that revenue stream. Over time, we expect to start touching the plant through direct ownership. For example, our Erie, PA client has offered us ownership in their facilities in exchange for not taking Cultivation Max fees. So we are beginning to touch the plant directly. We have ownership interests in Canada House Wellness. We own a big chunk of their stock. We have another client in Montreal that we own a small piece of that grow as well. So we're beginning to touch the plant as we move forward. I mentioned Big Tomato. We are looking at stepping into owner-operator roles as we move into 2019, and we've got a lot going on nationally. If you're bored in November and you really want to learn about the cannabis industry, go to Vegas. Go to the MJ Business Conference that'll be held, I believe it's the 14th to the 16th. This will be probably the largest conference on the planet this year, and they got moved out to the convention center last year. This year, they're in the main convention hall in Las Vegas, and my understanding is they're almost triple of what they were last year, and last year they were pretty big. So if you'd like to learn more and hear more and learn more, that's a really good venue that you could then attend, and there are a lot of classes, there are a lot of things before and after and during the conference that'll help you get a better insight as to what the industry is doing. We've given some revenue and some performance information here. As we started up in 2014, moved to 15, you can see our revenues were $835,000 our first year. That was myself and Andy Williams doing all we could. We had one employee at the time, and we were hustling and having a good time. The second year was a growth year for us, so we ended up hiring several people. It was also an off year for the industry to get new licenses. Last year, we were right at $3.5 million. We had a loss, but of that loss, about $4.8 million of that was stock compensation. This year, we're projected to have about $9 million on the top line, and we're looking at hopefully achieving about a $2.6 million profit margin. Recently, with our Canada House arrangement, and this is all public knowledge, but we took stock in that company rather than a lot of cash, because we believe in their future. They're going to focus on medical, and they're going to be very active in Canada. They've already got their first couple of licenses for dispensaries in Canada, and they have a really good history with the veterans and the medical community there. So where they're currently referring their clients to go to, or Canopy or Aurora, one of the folks that are selling product, their grow comes online, I believe, this next month, and they should have materials in their own pipeline by the beginning of the year. So they'll start, rather than referring those out, they'll be able to capture a lot of that themselves. So we're looking forward to working with them. Our stock deal in April was at a certain price. The closing point, the end of September, was much higher than that closing price, which will have a dramatic impact on our revenue cycle. So, if it goes down next quarter, so be it. But I happen to believe that company is going to be very valuable over time, and we're excited to be working with them. 7 consecutive quarters of revenue growth, 3 consecutive years of revenue growth, 2 consecutive quarters of profitability in Q1 and 2 of this year. Third quarter should be very profitable, as we've already stated. The guidance we gave earlier is likely under what we're actually going to achieve. We have that master license agreement with Canada House, and we're currently working with a European group and a group in Central America to do a master license similar. And if those projects, as we expect them to develop over the next year or so, come to pass, that's going to generate a substantial revenue stream and long-term revenue for us, because we typically take a percentage of that value that they're achieving. We feel like we have superior performance when you compare it to other peers in the space. I like General Cannabis. I like American Cannabis. There are a lot of good companies in the space, but if you look at our financials and you look at theirs, there's a clear difference in our performance and their performance. And just as, I'd love to be valued like Canopy is valued. I'm going to probably make $2 or $3 million this year in profit and push into the $10 million range. I know that's a tenth of what Canopy's worth, but if I could be worth a tenth of $11 billion, I'd be a pretty happy camper. But the U.S. markets are going to continue to languish, we think, just because of the legal issues that still assault us, banking, all those things that come to pass. But over time, we expect all those issues to be addressed. We think the market in the United States is going to be very strong over the next several years, and we're looking forward to making some money and enjoying what's going on. Last thing I'm going to do is I'm going to cover one of the things that we're doing that we think was things that set us apart is we didn't go raise 20 or 30 or 40 or 50 million dollars and get in early on to lose a lot of money in operations. We spent our time kind of growing and learning the industry. Now that we have a better grip and we think a better understanding of its future, our objective will be to take advantage of opportunities of underperforming businesses that are no longer around. Those of you that were around in the Resolution Trust days that watched the liquidation of the S&Ls where people were buying things for 15, 20 cents on the dollar, those days are coming for the cannabis industry as well. Investor groups that have not gotten the kind of results, that got tired of putting another $1 million instead of a breakout another 1,000, they're breaking out another 100,000 or another $1 million. Eventually, those groups are going to have to find somebody to help restore value. So one of the values that we think we're going to bring to the industry is our ability to step in and turn around businesses and get them better efficiencies in their operations. As I mentioned before, Canada is a great example. Good companies, a lot of great LPs, but I think in the 106 that are currently listed, if every one of them grew everything they claim they can grow, every man, woman, and child in Canada is getting a couple ounces every month. So at some point, competition in that compression is going to come up and affect the Canadians, just like it did in Colorado. 4 years ago, $3,000 a pound was good wholesale for a pound of flower. 2 years ago, that was probably down to $1,600, $1,800. Last year is down to $1,200. This year, good pounds on indoor are going for $800 to $900 a pound. So if you can't make money at that level, then you don't need to be in the business. We see the same compression coming in Canada, just like we saw it in Oregon last year, just like we saw it in Washington State. These are all states that are getting mature markets, and you want to be looking at companies that can survive and thrive with that competitive pressure. We feel like we're one of the few that can do that. So I'll stop and take questions at this point. Alan? Alan's question is, why aren't we doing things in other states from an equity standpoint? What's maybe keeping us from doing that? Right now, there are really two things. Money. We've never been actively and very aggressive in raising money. The company since day one has raised and used about $2.6 million total. So we've not taken huge dilutions. We're fairly small. Our float's fairly small. 70,000 shares a day. I think my last Nobo list had 4,000+ people on it. So one of the things we also had to do was learn. So we've taken some hits. As we disclosed in our last Q, we have a client in Nevada that's not paying us. and they feel like they can take advantage of us. They used us for 12 months. Oh, we're going to catch up, we're going to catch you up. And we finally had to cut them off and find a good attorney in Nevada to sue them. They're a bunch of Canadians, by the way, that own the company, and they're used to buying their way out of these problems. So for us, we once in a while, we've learned a lesson. So as we move forward, as Alan suggested, we're going to move forward with well-funded, well-intended groups, and we're going to be very careful as to how we work with people in the future. The group in Erie, Pennsylvania is backed by a very strongly financed, wealthy individual. He has the ability to write the checks. He's also in biodiesel and bioenergies and alternative fuels. He's a very strong person. And when we find partners like that, it makes it much easier for us to get involved and surrender the fees that we might make in exchange for equity, because that equity gain for us is going to be stronger. We were not quite ready to take on full operations of a facility because we've been building our own stable of people. So now we feel like we've got enough people that have been trained up that we can deploy to other states successfully, as we're doing now in Ohio. We have 2 clients in California, 2 clients in Nevada, and we have a full-time grower in each one of those facilities. We also have staff that oversee that does audit work. So we've kind of taken our time to get a little bit more lockstep in the industry, so we think that just better prepares us to be better operators in the future. And there's several good operators. M.R. Dean is doing some interesting things, and General Cannabis also has the next big crop or whatever their process is. We just feel like we're so much further ahead of those folks with regard to productivity and performance. Yes, sir. Yeah, our outstanding fully diluted is about 31 million. 14 million was in our float, so we're probably just over 13 million that are held by individuals such as myself. I hold 1 million plus shares of stock. I've never sold my stock into the market. Andy Williams, I believe, holds about 2 million. Josh holds about 4 million. These are in our DEF 14. You'll see the ownership profile. Management, officers, and directors at our last DEF 14 held about 35% of the company. There was a little bit of a dilutive element since we paid roughly $3 million for the Big Tomato transaction in the form of stock. I think we issued about 1.8 million shares for that transaction. So there's been a little bit of dilution in the meantime. No convertible debt. Our balance sheets are clean as a houndstooth. We have no debt whatsoever. The little bit of convertible we had last year, we paid back. I believe those were all at 12%. Of the 900,000 we had on convertible, about 500,000 was paid back in full. The other 400,000 converted to stock because they liked the deal. So no debt on the books whatsoever. Yes, sir. I don't think anybody has, at least at our level, truly institutional. I can look at my NOBO list, and yeah, I see some interesting names with some holdings that I guess if I were to trace back, maybe a very small boutique firm, but about half of our stock is in the OBO side. I don't even know who owns it. So I don't know if I've got somebody at an institutional basis buying 10,000, buying a few shares here and there just as to put a little toe in the water. But right now, no, and we've not really gone out and sought capital. We've been very careful. In fact, we've turned down, I get people all the time that come to us and say, we'd love to buy your stock. The last little bit of money we raised had a specific purpose. And we stopped with that one raise, and that's where we are today. Sir? The warrants right now are priced at $1.34. All of them, including the 2 $1 million investments, I think we're at about another 2.4 million shares in warrants that are outstanding. They were attached to the price that we did last year. But that's it. We do have an S8 plan this year. You'll see in our third quarter that we gave out roughly 625,000 shares to 27 individuals in our company. This year, I think the most we gave out was maybe 50. The smallest chunk we gave out was probably 15 or 20,000 shares. They mostly went to non-officers and directors. In fact, this year, I took no stock in the company in the S8. I had my stock, my award was divvied out to everybody else on a percentage basis because I felt like I've been paid pretty fairly this last year, so I didn't feel like extra stock I wanted to see our people get it. So I took my allocation and made sure that it got split up. The first group expires in March of next year, and the group after that expires in, I think, December of 19. So we have 2 expiration dates that roll forward. The two big investments of $1 million each, I've been assured they are going to exercise. They'll likely exercise, I think, towards the end of the year, one of them. The other doesn't come around until next December. So I expect that one to probably exercise sometime maybe next summer, depending on how the stock's doing. No, it's not a huge dilution for us. And to be honest with you, an extra $1.25 million in the bank will be welcome. We can find a good use for it. We're starting to actually get out and work more in the IR space. So we've actually worked with Alan's team, and we have an arrangement now with them for coverage. We've also picked up some coverage with Michael Berger's group, the 420 Technical, and we work with Phil and KCSA. That's pretty much the only folks we rely on for any kind of IR or other support. We've been big fans of Alan's for many, many years. He does a great job with his investor group. When the stock ran in 2016, I can tell you why it ran. The gentleman sitting right there, because the moment he bought our stock the first time, within like 30 minutes, our volume went up by a factor of 50, and our price went up by like 80 cents a share. I love Alan. I would curse him because the stock went to $5, and as a CEO, that's the last thing I want to see is a stock that's worth $2 run to $5, and there's nowhere else to come but down. And every time Alan sold a bit, we saw some pressure on the stock. But Alan's group of 1,000 folks, I'm sure, are well informed, and we do appreciate their interest in our companies. So hats off to Alan and his team for doing a great job. If you don't know anything about this industry, you ought to talk to Alan because the subscription is very inexpensive. I've been a member for going on 4 years now, I believe. Alan Brockstein, gentleman sitting right here. So he runs 420 Investors. It is a subscriber group. It's been around for 6 years, 5 years. So very well respected individual in the space. And if you don't know much about the industry, it's worth whatever he charges a month to go in and learn of what's going on. So any other questions? Well, that's great. I'm going to let you guys be ready for the next one. Well, actually, lunch break now, as I recall. And at 1 o'clock, we've got MTech and MJ Freeway. Oh, that's a good one. That's one that, you want to be here to listen to because they're talking about NYSE and all kinds of things. MJ Freeway just raised $10 million. I think that's their third raise in the last 3 or 4 years. So they're going places. Good company as well. I'd stick around this afternoon and hear what you can hear about the rest of the folks. Thanks for coming in.